What's going on, guys? Quick video update on my trade that I took this morning on the S&P 500. I'm going to break it down smoothly, guys, so you guys can understand. And I'm going to break down order flow a little bit so you guys can understand why it's important for you guys to be adopting this to your game, whether you're a price action trader, whether you're a smart money trader, whether you are an ICT trader. Learn order flow and adapt it to your strategy because it's going to make you a 10 times better trader, in my humble opinion. So obviously, guys, number one, the reason why I decided to take this position was because my pre-market analysis. Number one, the first thing I do is I always go on CNBC or I go on the news app. If one doesn't have the article, I go to the other. And for this morning, it was on the news app on the App Store. If you have an Apple device, just download it. It's free. And download and subscribe to Investors Business Daily. But this article stated stock market today, Dow rises ahead of the Alphabet Tesla earnings. Verizon jumps on earnings live coverage. So again, what is the keyword here? Rise. So I actually wrote this here on my journal. I wrote the pre-market is looking bullish. The keyword in this article is rise. I would like to see us get back to 63.10 area, the point of control. We are in something called price discovery. I'll explain to you what that means. Being outside of the value area low and the value area high, where 70% of price action in business is being conducted. I want to see us get back to this area and give us that push up to 63.30, 62.30, my apologies. But I'm always ready to adjust. So you guys can see right here, this is the volume profile. So the delta is not really that important. Market hasn't really opened. Volume is very low. But you guys can see here that the S&P 500, we're out of the value area high and the value area low, and of course the point of control, where the least amount of volume is typically occurs, and of course where price typically likes to reject. It's a key thing in order flow trading. You want to make sure that you're always trading where 70% of the moves are always done. So my analogy is this, guys. The value area, which is the value area high and the value area low, and the point of control, this area right here, plays like a magnet. Price is going to end up basically bouncing off these higher lows and eventually getting here. And I want to see how price reacts and volume reacts in the point of control area, which is the 63.10 zone, to see if we can break. And if we break the value area high at 63.14, I believe that we will shoot up to 63.20 to 63.30, etc., etc. So this was my ultimate trade result, right? Beautiful setup, right? We created a higher low, bounced right off of it. We had an absorption candle right over here. I'll explain to you everything I'm saying in depth. Stacked imbalance, price action imbalance, multiple fair values, aggressive business being conducted here. A lot of aggressive buyers right at the point of control, right at my personal supply and demand zone, and we freaking ripped and we created higher highs. So I'll go more in depth what this all means. But first, let me break down my trade setup. So let me just zoom out a little bit so you guys can read what I wrote. So again, I wrote this, guys. I would like to see us get back to the 63.10 area, the point of control. We are in price discovery. I just kind of briefly explained to you what that is. Being outside of the value area low and the value area high, where 70% of price action in business is being conducted, it's obviously not a good sign. Price typically plays like a magnet, and I want to see us get back up to the 63.10 areas and give us that push to 63.30, 62.30, my apologies, and above. I'm always ready to adjust, but that's what I'm seeing. And I basically wrote this morning in the group chat, if you guys didn't see it. Now, again, why I took this position. So we were in price discovery, meaning that we were out of the value area high, where 70% of business is conducted throughout the course of the trading session. I want to see based on I saw based on the chart, we were going back up to the value area and the point of control due to this area playing like a magnet. I talked about this before. Whenever we're out of prices, whenever we're in price discovery, whether we're high or whether we're low, price typically reconnects back to the value area like a magnet, and from there it makes it. But I'm going to show you right now so you guys can see like how it makes sense after this trade. I'll actually show you guys right now, actually, matter of fact, so you guys can see what I'm talking about. So let me put my camera down. Let me go to the S&P 500. Right? Order flow is not really important right now, like the volume profile is not going to show anything. But look at this, guys, right? This is a perfect example of what I meant by this area right here the value area. Right now, we don't have anything because the market is typically closed. That's why we have this little exclamation mark because there's no volume right now. But if you guys notice, here is where the value area was, right over here. Right over here. Put that right there. So if you guys notice, price ran up from the value area, or from the point of control, or the value area where a lot of business is conducted. We shot all the way up, like we literally ripped 26 points. And what happened, guys? We dropped all the way down, just like a magnet, right back to the same area. What's likely going to happen is we're going to do one of these tomorrow and probably run up and break these highs up here. That's what I believe will likely happen tomorrow morning during market opening. If we retrace, I'll be surprised. But how the market is going, I just don't see us doing that. But time will tell. Time will tell. But hopefully that's making you guys understand. So I wrote here that based on the chart, we're going back to the value area in the point of control due to this playing like a magnet. I just showed you how it plays like a magnet and attracting price back to this area. Now, once we broke the 9:30 a.m. candle, I saw volume kicking in. I instantly, this is me being honest, I instantly got in at about 9:33, 9:34 a.m. The reason for that is because we created something called a Delta Divergence, which basically I'm going to explain to you shortly what that means. But basically, it's a negative delta that was basically printed, but a bullish candle and a stacked imbalance to add to that. Now, right at the end of the 9:30 candle, this is all basically cross created. As soon as we broke as soon as we broke, let me put here, I forgot to add it here, the 9:30 a.m. candle, we had a 5.2, hold on, I spelled candle wrong. Candle. We had a 5.29 million order bullish delta. We had a 2.65 million order for obviously bulls, and we followed by a 4.09 million delta favoring buyers as well. This created a bullish imbalance, not only in price action, but on the delta footprint as well. In addition, we created multiple fair value gaps that gave me the confidence on the long positions. Also, we created a massive volume cluster at 63.10 to 63.16. This showed me a lot of aggressive buyers were at the value area, which gave us that push to help us create higher highs, which we smashed over 30 points within 3 different positions. I think it was 11, 9, and I think it was 12 on the other one, a little over 30. But that's not the point. But the point is that we caught this beautiful position with very minimal risk, and it was off one hit. Now, breaking down the trade itself so you guys can understand why I took it. So number one, guys, let's first break down. Let me see if I can zoom in a little bit more. So first, let's break down volume profile. Volume profile shows us how much business or how much orders are being executed in a specific hot area known as the value area, which goes from value area high to value area low. So 70% of all the moves happen within this area. So I knew when we were down here, whenever price is something called price discovery, meaning outside of the value area low or outside of the value area high, we typically play like a magnet and we come right back to this big area where business is being conducted and the move will happen to where it's supposed to go. So obviously we were bullish, we were going down, buyers absorbed this higher low, we started going up. Now, as soon as we broke here, we saw a lot of aggressive buyers here, ironically right at my point of control and my personal point of control right here. But when we broke here, I just saw us absorbing and creating a bullish diversion, which I'm going to show you right now. A Delta Divergence right now on the Delta footprint shortly. But I got in right here, my first position. We shot up. When we retested and we touched this fair value gap at the volume profile point of control, I got into my second position, which got me full into my lots. And then we just shot all the way up, creating higher highs, creating a fair value gap here, creating a fair value gap right here. Again, we saw minimal sellers defend their position, and overall, buyers were in control of this trade. Now, why were buyers in control of this position? Let me break it down to you guys right now. So obviously, guys, number one, the bullish diversion. This is a huge reason why I got into my trade. Now, what is a bullish diversion? It basically means that when price or the candle is shooting up, but the delta footprint is basically negative. This is a huge indication that buyers are absorbing selling pressure. If it was the other way around, it would be that sellers are absorbing buying pressure, which is giving me the idea that we're going to have a bounce play. Now, the reason for me executing my position a tad bit early right here, even though my supply zone, my point of control is right here, and the volume profile's point of control is up here, is because we created something called a stacked imbalance on the delta footprint chart, meaning we had aggressive buyers coming into play. Think about me, right? 176, 178 pound guy on a seesaw with a person that's over 300 pounds. What's going to happen in the seesaw? The person that's 300 pounds is going to basically do something like this and vice versa. So that is showing me that buyers are outweighing the sellers. So this bullish imbalance and stacked imbalance just basically means that the block that's diagonal from the block that has the imbalance, whether it's this one, this one, this one, right here is 0, right here it's 0, right here it's 0. So all three of these blocks individually are 300% bigger than the ones diagonal from it. Because think of it like a seesaw, think of it like tug of war. So obviously we have aggressive buyers in this area. A third thing on the delta footprint chart, which is basically this, which shows me what's going on within the candle, we can see that the colors are very dark, meaning that we have aggressive buyers in this position. Now, once we broke and we closed the candle bullish, but the delta was negative, I knew that buyers absorbed all the bullshit that basically sellers were trying to throw at it, and we completely broke out of it. Now, once we broke the secondary candle at 935, we had a $5.29 million a buy order, again, favoring buyers, which gave us the push up. Again, aggressive buyer, aggressive buyer, aggressive buyer, and very minimal aggressive sellers. Sellers were just taking these hits, and then boom, we had another imbalance here, and we had a stacked imbalance here, and we ended this candle at a 4.09 million, buy orders favoring the bulls. And obviously, we created a bullish imbalance, think about like a staircase. We kept going up, creating higher, until we created basically higher highs, and we smashed this take profit. That's basically, guys, why I took this position. Very simple. Again, the fair value gaps, we broke and closed from my supply and demand zone. We retested back to the value area. And then, of course, more importantly, we had a delta diversion right over here. We had a bullish imbalance. We had a stacked imbalance. We had an imbalance right here, another imbalance here, and we had a stacked imbalance here as well as a single imbalance here. Again, guys, overall, it was a bullish setup. Again, when you apply order flow into your trading, it makes everything simply a lot easier. Now, this is something that does take time. You need to put a lot of effort to learn, but my friends, when you learn order flow, it makes your trading literally infinitely easier. So hopefully, guys, this video brought you guys some value and it gave you some insight why I took this position. And hopefully you guys were able to capitalize off of it because this is a beautiful setup on the S&P 500. Played really well. So let's get it, guys. I'll see you guys in the next one, and let's make this money. God bless you, and go buy yourself some crypto. Let's go.